All right, so we are going to talk about SPY and the SPY preview that I like to do. Basically, the market is like this ongoing narrative, right? Things change. What is important one week isn't important the next week. What is not important that week is maybe not important the next week. It goes all over the place. And some people don't really know how to figure it out. I mean, I'm not saying I know 100%, but I know that this can really help. The S&P 500 consists of 11 different sectors. And sometimes by analyzing the sectors, you can get an idea of as to, or get, I should say, some insight. You can get some insight into what is going to happen with the S&P. You can bring it down another level. Sometimes if you analyze the industries that are within a sector, you can get an idea where the sector is going to go. You could bring it down another level. If you can analyze the stocks that are within an industry, you can figure out where the industry is going to go. So sometimes the market is hard to read, sometimes it's easy. So the best traders let the market tell them what to do. They come into work with kind of an agnostic attitude. Going through these sectors, I think, is a great exercise, and it's something that we're going to do every week. And over the weekend, we'll do go over all of them, and then if things change or if something needs to be addressed during the week, we'll check it out. Now, what we're looking at here is the SPY. It's the S&P 500 ETF. This tracks the S&P 500. This is an ETF that's run by, excuse me, State Street Global Advisors. So it has a fact sheet. All ETFs have a fact sheet. So it's SSGA, State Street Global Advisors.com. And we can go down here. This is the fact sheet, and we could look at the sectors that are that make up the S&P. So there's 11 of them here, right? Information tech, financials, healthcare, communication services, consumer discretionary. Different sectors are in the driver's seat at different times. It's never going to be this easy, but just as like kind of a just to think about, let's just pretend the market is moving ahead. The S&P is moving ahead. 10 of the sectors are flat, but one of them is really overbought and it's been rallying. Well, that's the sector that's been pulling the market higher. So in a situation like that, it's like, all right, well, hey, this one sector that's been pulling the market higher looks like it's going to reverse. It's overbought and it's at resistance. So that's what we're looking for. So we're just going to take a look here at the S&P. Eh, not too much today. Now we're going to look at the tech sector. And what we're doing is we're looking at the ETF, XLV. Oh, oops, sorry. That's the healthcare sector. We'll get to that in a second. We're going to look at the tech sector, XLK. Now, to me, this looks like it's kind of really not doing much. What really kind of sticks out to me here is we get this phenomena, which we see all the time in markets. And this is how good traders can make money because they can identify these important price levels. And that's what I want to help you do. And if you're listening to me, if you're hearing the words that are coming out of my mouth, it's great. Sorry, man. I was just watching, uh, Rush Hour before. Anyway, so so notice how this price level was resistance here. Well, they became support here. Is that a random coincidence? No. There's people that sold here, and then the stock went down, or the ETF, sorry, went down, and then finally it blasts through their sell price, and they're like, "Oh man, I made a mistake. If I could buy my shares back, I am going to." So if they can get them at the same price that they sold them at, they're going to. This is why a lot of times when a market moves higher, levels that had been resistant can become support. But in the overall SPY analysis here, in the overall like market analysis, right now technology is not in the driver's seat. I'm not saying you shouldn't pay attention to it, but that's not what we're talking about now. Right now, we're talking about how the sectors can affect the market. We're going to go take a look at healthcare. This is XLV. When I first started doing this, it was really hard to get charts of sectors because it was, I don't want to age myself, but it was for ETF before ETFs. And the companies that make these charts, they sell them. That's how they make their money. But now that we have all these ETFs, we don't have to worry about that. Anyway, let's just jump into this here. This is healthcare. This is going sideways too. So let's just recap. We've looked at tech and healthcare. If we go back here, tech and healthcare, That's 40, let's just say roughly 45% of the market. Financials is for about 13%. So let's go look at the financial ETF. Now, this is where it gets interesting. This sector is pretty overbought. Some of the stocks in this sector obviously are very overbought. You can look at the stocks that are within the sector. It's like I said before, if you want to get more insight. And what's interesting about the financial sector, it's kind of dominated by just a couple different stocks. So here's the XLF. We're going to scroll down and we are going to see what the stocks are. And Berkshire Hathaway is 12.9% of this entire sector. There's probably maybe 30, 40, 50 companies. These are just the top 10. JP Morgan is about 9.7%. Visa is about 7%. So let me do the math there. That's almost 30%. So you have three stocks that make up almost a third of this sector. So if you're trading in the financials, this is something you need to pay attention to. So let's talk about what we just said. Financials are overbought. Let's look at Berkshire Hathaway because we're looking for something that could trigger a reversal. Financials have been driving the market. Let's figure out what's driving financials. And if that reverses, the financials reverse, and that could reverse the whole market. I don't know if you guys hear Clifford up there. All right, so this is Berkshire Hathaway. Again, biggest stock, 12.9%. Not really doing much. Second biggest stock is JP Morgan. Now, this gets interesting because JP Morgan could be poised for a reversal. It's at resistance, it's overbought. Don't think that. Don't look at it and be like, well, it's a little bit over. I mean, this line is at like, say, 225. This is like 226. You can't be too precise. I mean, I've seen a lot of technical analysts do that. It's like, well, it's 3 cents over resistance. I mean, that's just not how it works. When we're trading, we don't need to worry about that. We don't trade until it reverses. It might pause here and blast off in another week. I'm looking at this for a potential reversal trade. But what I'm going to do is not jump in until the reversal starts. And down the road, hopefully sooner rather than later, I will be putting out official trade ideas that you can all pay for. Best money you ever spent. So when I look at this, all right, let's call it 222. This level was important. It was a close here. There's been a lot of volume trading around 222, and volume begets importance. The more volume that trades at a level, the more important it gets. Now, if JP Morgan starts to reverse, and I don't know if it is, I don't know if it's not. I'm going to wait to see. And if it does start to reverse and it breaks this support, well, that's where I think about jumping in. We had a rapid move up here. A lot of times when you have rapid moves up one way and you get back to those levels the other way, you have a rapid move down. It's the old expression, gaps refill. It's not a gap, but it's the same principle. It's been so little time trading at these levels because it blasts through them so quickly that when the shares come back going the opposite direction, there's not a lot of vested interest. So the sellers really need to pound it. And this is the other really important thing to watch here is Visa. They mentioned, they mentioned AI in their release and everyone goes nuts. I remember like, I don't know, what was it, 10 years ago when cryptos first came around? A company could be like, oh, we lost $1 billion, or our chief financial officer just got indicted, the CFO, the CEO is in prison. But hey, we have a crypto. And it's like, whoo, the stock would just soar. But anyway, so Visa is at resistance too. So kind of right now, Berkshire Hathaway is kind of a non-entity, but this next two biggest stocks, Visa and JP Morgan, are at resistance. Sometimes when things get to resistance, they sell off. The sellers who create the resistance with their sell orders get nervous. They don't want to miss out. They start to think, gee, if one of these other sellers undercuts me, that's who the buyers are going to go to. So I better reduce the price I'm willing to pay. Other sellers see that, they do the same thing, or anxious sellers. I call it seller's anxiety. I've never heard anyone else mention that before, but I'm sure it's been mentioned before. I mean, in the history of trading. I mean, we know about remorse, but I'm talking about anxiety. All right, so Visa and JP Morgan, we need to watch to see what they're going to do to the financial sector. Right now, those are the two most important things in the market that we've seen so far. Let's explore a little more here. I mean, we took a quick look at healthcare. I just want to look at it again. All right, so next up is consumer discretionary. Now, this is an interesting thing to look at here. And the sector, I would say neutral. But what I want to point out here is that this particular sector, the consumer discretionary sector, is dominated by a couple stocks. Amazon, people think Amazon is like big tech. I mean, I guess in some ways it is, but in the market, it's in the consumer discretionary sector. So Amazon is 22%, Tesla is 12%. These two stocks are basically a third of a sector that's probably 20, 30, 40 stocks. We'll just take a real quick look here. So the Patriots are going to lose in Europe this week, and whatever. I'm sure no one feels sorry for me. I'm so glad Bill Belichick is gone. I'm so sick of. He's the most overrated coach in history. Do you know that when Tom Brady's not his quarterback, he actually has a losing record? All right, so Tesla, Amazon, nothing to really see there. Let's keep moving on here. This is another sector, communication services, that's dominated by a couple of stocks. If we look at the holdings here, Facebook, and I'm always going to say Facebook, I will never say Meta, 20%. Alphabet, meaning Google, about 19%. Now you have two stocks that are about 40%. So I guess the takeaway is if you're trading one of these stocks that are in this sector, you should kind of pay attention to one of what's going on here because they could have influence on that. All right, let's just keep moving along here. Next up is industrials. Rallied, now kind of going sideways here. The market's like this ongoing narrative, and that's what I love so much about it. Things come in and out of importance at different times and so forth and so on. And if you pay attention to these sectors and you really join our community here, I think it's really going to help. I mean, I actually know it's going to help. I mean, I know that sounds kind of arrogant, but now consumer staples is kind of a smaller sector, but sometimes money comes into consumer staples right before the market goes lower. It's the old classic flight to safety. All right, so we have. I'm just trying to show you this because I know. Oh, sorry, I'm on the wrong tab here. Energy, utilities, real estate, and materials. So let's just take a quick look at those guys. These are energy is a small sector, but it can affect the broader markets. That's kind of been going sideways there. Utilities, consolidating. This is what we saw before, right? Resistance at a former resistance level. Materials, so the boring stocks like chemicals and so forth and so on. This might be where the real AI plays are. These companies might become so much more efficient. Same thing, resistance at a former resistance level. All right, real estate sector. And thanks everyone for tuning in here. Oh, see, same thing, right? Resistance at a former resistance level. As the market progresses, if you start getting into this stuff and watching it, it's really going to help you your analysis. Okay, thanks everyone. I will see you soon. Thanks for being here.